It's me, Joe Quartucci.
And it's me, Arpit Sharma.
We're bringing you Bull Bear Brief this week, where we're going to discuss the crazy market, talk about a market that doesn't understand what a war is supposed to look like. Almost 7,200 on the S&P 500, another all-time high. NASDAQ just continues to be unstoppable, inflappable. Dow's been a little bit wonky, but we saw oil end up another 2% last week, close at
Mhm.
around $101 per barrel. Looks like it's going to open up again tomorrow. You would have told me that we had $101 oil. And I said there's no way markets could continue to advance, but I would have been wrong. What are your thoughts on that, Arpit? Tell me what you're thinking. Tell me what your thoughts are. Tell me, are we living in La La Land? Is it Goldilocks, or is it just a ticking time bomb?
It's hard to tell. Surprise, surprise. It's a hard question to answer. You can see it kind of like as a tale of several different stories here. I mean, it's just a matter of which one is more powerful at the moment. The Iran war story was very strong. It drove the markets down, but the idea of a taco, right, or peace deals coming out is pretty pervasive. And so the Iran war, any major changes, and it doesn't seem to have major effects on the overall markets anymore. You
Well,
also
this,
had this week. We had several major earnings,
Mhm.
especially on the 29th. We had Google, Meta, Microsoft, Amazon all report on the same exact day. And then the day after, we had Apple report. All the earnings, apart from Meta's, were received extremely favorably.
What happened with Meta? Because Meta's a big, obviously a big player. What was the big?
So the main thing with Meta is that
And
they
just for those
are
that don't know, Meta is Facebook,
yeah, Meta, Facebook.
Instagram.
Meta is they all across the board raised capital expenditures for
They're
more
spending a
AI.
lot of money for people who don't speak weird speak.
Yeah, they're spending a lot of money on AI, on data centers, on GPUs, on talent, whatever it may be. But Meta's AI is the least monetizable. It's Google had Gemini. Gemini saw a huge increase, huge usage. Amazon has the Anthropic Claude story, which is obviously making a lot of money now, especially after the whole DOD or DOW, however you want to say it, debacle that we saw. Um, and then Microsoft has their own little AI, so they're all fairly monetizable, and they're starting to see some revenue. But Meta's is what's the point of Meta's AI? What are you using it for ultimately? Ultimately, Meta's main business is
Help you
still
write better social media posts.
that's what. So, but they're increasing capex.
I think the whole dream that Zuckerberg had, and again, now I'm getting into the head of a billionaire,
Yeah.
was to have the Facebook ecosystem be more similar to what Google used to be, like a more modern version of what Google was. I just
Mhm.
don't think, I mean, at this point, Chat GPT has replaced Google as search. So, I know Claude is much more, of the work solution. So where does Meta fit in? Because like, I mean, I'm just speaking for myself. I go on Instagram to look at pictures of my friends. I go on Facebook very rarely,
Yeah.
primarily just to support what we do for work and market. But I don't go on there much anymore. And I know my son's generation, your generation, Arpit, I know that you are a Gen Z individual,
Mhm.
doesn't do a lot of Facebooking. So
Not at all.
where they fit into that picture, and I guess to the point you're trying to make, if I'm understanding it correctly, is Meta is spending billions, millions, billions of dollars, and it's not sure your investors are not sure where the payoff's going to be. Is that how to read
It's
it?
just less. It's less obvious or less. The story's not as powerful as you can say with Google or Microsoft
Right.
or Amazon.
Well, Microsoft had a tough week too. I mean, again, big capex and a lot of purchasing of memory, which is required for that. And
Yeah.
Microsoft's had a tough year. I mean, really have not benefited in the way that some of the other tech companies have, and it's obviously a very robust business model. I noticed Roblox was also down significantly. The age verification caused some trouble for them, and they had a big bad uh, uh, week. And then obviously Spirit Airlines, due to higher oil or jet fuel prices, is now bankrupt. So for any of our listeners out there who have a Spirit Airlines ticket booked, I got bad news for you. You're not going to be able to use that. They are officially closing up shop. And of course, there's political aspects to all of this. I noticed that the Spirit CEO came out and blamed, or no, I'm sorry, the Secretary of Transportation came out and blamed Biden and Buttigieg, but it's kind of hard. And again, I don't get into the politics. I don't care that much. But it's kind of hard not to look at the higher jet fuel price and say that that didn't have something to do with it, because a smaller company like Spirit's ability to hedge isn't as robust as, say, a Delta or an American or a
Yeah.
United. Is that fair to say?
No, no, that is 100% fair to say. And I was gonna say, you can see the semblance of a K-shaped economy in the stock market,
Yeah.
right? It's not just in yeah, you can see, and I was gonna say also, we saw, earnings for Domino's,
Yeah, Domino's has
which is
been a huge area of strength for years, and it's
yeah,
really suffered with that higher inflationary pressure on food
higher
costs.
inflationary pressure, same store sales are flat and plummeting, but that's like that's an indication of cheap pizza,
Yeah.
right? If you look at any other stores that cater mostly to or businesses that cater a lot to just a specific low income household or low income group, their earnings aren't that good. Whose earnings are really good?
Yeah.
Tech, AI,
The big
the
companies.
high flyers, the big flyers, the large cap, the
Let
mega
me
cap
let
companies.
me just say something to you and to our listeners as a consumer. I went and got gas. I left the gym on Friday. I'm sorry, on Saturday, and got gas.
Yeah,
It was $4 a gallon here in Texas, and I live in Central Texas in Wimberley. Eat 'em up cats. That's where I went to college at Texas State in San Marcos, just around the corner. But I can tell you that filling up at $4, $122 for my car. My son is around 135. I've talked about that on previous episodes. I gotta think that's starting to pinch the people who would be buying Domino's pizza. And so that if that's you, by the way, I love Domino's. They're
Domino's
not
is
a
the best
sponsor of
pizza
the show.
chain
But
out there.
Domino's, if you want to sponsor the show, our tens of listeners will certainly buy your
But
pizza, I think. So if you're thinking about a Domino's and you want to try to get those earnings back into good shape, let us know. We'll collaborate with you all day. But I happen to like Domino's pizza. But bottom line is that consumer who would purchase that pizza is not in great shape right now. Is that fair to say?
the typical one, yeah.
Now, you know how we get ticks on this show, and I always tell you, be careful not to say right. Well, I always say, is that fair to say? So I'm going to try not to say that so much. But
You
well,
start to notice it sometimes, right? Like, you
well,
need to start,
hey, man,
I
when
need
you
to
start
pinch
doing the
myself every time I
show,
say it.
I don't know if you listen to yourself. I try to listen to us each week, and there's a lot of work I need to do. Let's
Well,
talk
I
about some
fire
of the
forget.
winners: Qualcomm, Apple, Alphabet. You mentioned them earlier, which is Google, and then
Yep.
Caterpillar. Without getting into what we do for in our portfolio management, Caterpillar has been an interesting story that you and I have talked about over the last couple of years in terms of infrastructure, in terms of you know all of the energy infrastructure, all of the technology infrastructure that has existed for 70, 80, 90 years. We've been saying and believing that has a lot of that has to be replaced for the 21st century, for the AI revolution. And a big winner in that seems to be Caterpillar. Tell me what you think about that.
On the Caterpillar story, to be fair, I haven't had the chance to look into
That's okay. I'm just,
their reports.
I'm talking thematically right now.
Yeah, but
And remember, everybody, we're not making recommendations for you to go out and buy a
def-
stock. We're talking about
definitely
these
not.
stories, these things, the way that we kind of look at it, philosophy. Always talk to your financial advisor, talk to your tax professional, talk to your legal advisor. Do not take advice from this show as advice. It is entertainment and education only. Go ahead,
Yeah,
Go ahead.
but from what I know, the main story again with Caterpillar, and you can extrapolate this to almost most infrastructure industrial plays, is again power generation for AI and data center campus development. That is there it is again. That is the primary story for infrastructure or industrial plays. Is do they and this when we do infrastructure, we look at a little bit different infrastructure, or we consider infrastructure a little bit differently than everybody else, but the main ones are utilities.
Yep.
Utilities, obviously, again,
Utilities
power
are how you get
generation.
your electricity, how you get your water, how you get your basics, right?
Yeah, and you can talk to anybody who lives next to a data center. Electrical prices have gone up, right? And so you have the utilities that are also major ones. You have materials, different material plays. So you can look at into silver, copper, right, palladium, all the the heavier or the more rare earth metals. These have all gone up again because of their usage. The demand is going to increase. Then you have plays like Caterpillar, people that build stuff that provide equipment, and Caterpillar is a pretty gigantic moat. And moat, for those of you who don't know, is essentially just power or control within their specific space.
Yeah.
It's we
Not
call it
not not a ton of very big competitors to Caterpillar.
not many,
Yeah, especially in the heavy
especially
equipment space.
heavy equipment, and is more so on the dealer side, their ability to just get contracts and control the business very much. And so Caterpillar, everyone, we saw this some time ago. We've been fairly, I guess full disclosure, we are pretty decent. We do hold Caterpillar. It is a it has done phenomenally well, and it is a fairly good infrastructure play if you want to kind of diversify. But here's the one thing that actually kind of, is on the risk side, is that if Caterpillar and a lot of their returns are based off of AI development and AI generation and data center,
Well, yeah,
you're
because AI it feeds into the theme we're talking about. AI companies are building a lot of large buildings and
yeah.
energy infrastructure, so it would stand to reason that they're gonna create extra demand for something like Caterpillar. Go ahead, I'm sorry.
And here's the thing, and this is where someone like a portfolio manager looks at it, is that when you start looking at a whole bunch of different holdings, you want to look at diversifying your holdings and managing the risk that you're taking on. So one thing we want to do is, oh, I'm going to take on these high tech growth companies. I might balance out that higher growth, that volatility, with something that's an industrial safer play. I would buy something like Caterpillar. But now you're having this, or Caterpillar Utilities, now you're having this story where the high tech growth guys, their sheer existence is driving the returns for the safer plays. So now you're having this thing where your historically safe and protective plays are highly correlated or highly related to your riskier plays, and so there's now is this one tide lifting all things. So if that AI trade doesn't play out, it trickles down to everybody else.
Yeah, but I mean, I'll play the devil's advocate for a minute.
Mhm.
I recognize that there's not a fast pathway to profitability with some of these companies
Yeah.
that are in AI, but the spending isn't slowing down. I mean, it
Mhm.
is. So, I guess I would say to investors, if you're thinking about this, how do we find a stopping point on the expansion of the capability of AI? I just don't think that these large companies with massive balance sheets and huge amounts of cash are. I can see some of them are being punished for their capex, but they are not going to stop spending because I think they've all identified that this is required for them to be a player 5 years from now, 8 years from now, so forth and so on.
It's an arms race,
Yeah, it's an arms race.
and they have to develop themselves, or they will fall behind. Claude, Gemini, ChatGPT might be restricted nowadays. They have to keep spending money to keep developing.
But they're not having money. I mean, chat anytime they do a raise, they have no problem raising money. So again,
There, yeah, I was gonna say there are
maybe
internal.
maybe that day does come, but I'm just
Yeah,
saying, like when they anytime they do any raise, they fill it up, and a lot of these private equity companies and private equity feeder funds are so voraciously hungry for access to these private market deals like OpenAI, Anthropic. I don't know if it's perplexed. I may be getting it wrong, but there's a number of people in this arms race that are not publicly traded companies yet, and they are
yeah.
not having issues raising capital, even in an environment where capital is getting tighter. So,
I
I mean, you know what I mean?
But they're all going public now.
I mean, that's true, and I'll be curious to see how the public markets react to their because we saw companies like Uber, we saw companies like Airbnb initially come public, see a big drop in their value, and then find a way back to where they started and beyond. So, like, is that going to be the story of AI? Is there going to be one or two winners? I mean, these are all things that we can't predict. My point to date is that capital, and this is the devil's advocate side, and because I know kind of where you stand on this thing, and I know that it's difficult to predict, but capital is flowing here, even though there is not really a clear revenue model yet that makes a ton of sense. I do think that Claude and Anthropic has a really good shot at a revenue model because if you can just divert what a company spends. If you can divert what a company spends on software such as companies like Salesforce or Oracle to Anthropic to have them do a custom version of what you need much better
Yeah.
and much faster, that to me makes a lot of sense because a lot of companies will do that. I mean, we, our company would do that. I mean, Salesforce is such a booger to work with. I mean, it's amazing, but you know, if you could find something that was more customized to what you were looking for, I mean, I could see that working. But it, the whole game for those of you that don't know this already, the whole game on Google with search was all about advertising. And so at this point, how are you going to enjoy going on to Chat GPT and asking a question and getting advertising popped up in your feed? And maybe that day is coming, and maybe that's how they'll do it, or maybe they'll sell.
No, no, that's how they plan on doing it. They've announced it.
Well, I mean, the other thing they could do is they could sell prioritization. So say I had a pizza business. We'll just use that as an example since we talked about Domino's
Yeah.
earlier. Say I have a pizza business and I really want my pizza business to be the one that pops up on Chat GPT when you search it. It's a version of what we would call search engine optimization on Google. I'm sure Chat's going to have something like that, but that's like a pay to play type thing rather than it being actually something that is valuable and useful to the user. Pushback on that is going to be this: if it's not valuable and useful to the user, they probably aren't going to use it. They're going to go on to something else. And there's so many competitors in there. It's kind of interesting to think about. And so I don't know. I don't know what the revenue model is. I got really distracted there, but the point I was trying to
Mm.
make is
Oh,
that
yeah.
these companies are not having trouble raising capital, and these large companies like Microsoft, Apple, Amazon, Google, Meta, they are not going to stop making these investments for whatever reason. So I think there's still some runway
Mhm.
for there to be, back to the larger point we were making, which was about Caterpillar, for there to be large expansion in infrastructure, both corporate and government, to make this new world that we live in work. I mean, that's kind of my take there, and something I think they'll be watching.
Yeah, no, it's a fair take, and again, as we can tell, the markets are incredibly unpredictable.
They're very resilient. Let's touch on, before we shift to our topic du jour, which, if you don't know, that means topic of the day. Let's
Some
talk a little bit
French.
about Bitcoin. Once again, up 1.8%, getting closer to that 80,000 figure. Gold and silver, the other two kind of store of value plays. And I'm not saying that Bitcoin is the same store of value that gold is. Pretty much flat for the week, not really catching a bid. I would think that with the amount of money that the United States is spending, and fiat currencies being currencies that are printed by sovereign governments like Chinese government, Japanese government, American government, European governments, would be making a larger bid for gold, but gold has really pulled back and kind of stayed down. Not, I wouldn't say it's like in any kind of dangerous territory, but well off of its highs and just not really catching a bid. And I would think there'd be a lot more money flowing there. Bitcoin, on the other hand, has a very strong tie to technology, as we talked about previously on the show, has kind of a levered tech trade on
Yeah,
Bitcoin, and we started to see it catch some steam there too. Any thoughts on gold, silver, Bitcoin, or cryptocurrency in general?
a lot of thoughts on Bitcoin, but probably not enough time for 'em.
I
On
mean,
the
just
gold,
in the general
yeah,
movement. Do you think that the movement in cryptocurrency starting to catch some steam, and it may run out of steam? We don't know. Is just related to markets getting stronger again and capital flowing into risk assets?
100%.
Okay, yes,
That's
good.
what I think. I believe, the whole crisis of that we saw both in 2022 and now is kind of proof that cryptocurrencies themselves aren't risk. How would you say, risk hedges
Stores of
or
value.
inflation hedges? They're not stores of value at all. They are risk based. They're risk forward assets. So if you want to bet that risk taking is going to increase, that people are going to get more speculative, Bitcoin's a great place to be in because that's king of speculation.
Yeah,
As for gold and silver, that really has a lot to do with yields and treasury rates and
spiking again.
spreads. The scary words that we see thrown around, but are oftentimes pretty hard to understand. A lot of that just comes from just how would you say this long term rate forecasts. It's yields are expected to be higher for longer.
Wouldn't that be higher yields for longer? I guess that would be the thought there, would be that that will have a disinflationary effect, and so
Yeah.
gold being an inflation protecting asset is not catching as much of a bid. Am I interpreting that correctly?
Yeah, and again, with the way to look at it, markets are forward looking. If inflation is high, gold actually will not do that well in that current time period.
Yeah.
Gold will do well when inflation is a little bit low, but the inflation expectation is high and yields are still low. Gold does really, really well, which is why in most markets gold is positive. When you're in a highly inflationary market at 5-6%, gold initially won't do very well. It will fall with everything else, especially with the expectation that rates will rise.
Okay. Yeah, that makes sense to me. Last thing, and then we'll move on to our topic of the day. I mean, I know we kind of touched on this last week, but there was some relief in the oil prices a couple of weeks ago, but now they're back over 100, and Brent is at 108 at end of the week. And again, we're looking like the week we're going to start with a higher oil price. I mean, I talked about the $4 gas. We talked about inflationary pressure on food producers. I went to the grocery store the other day, dude. Blueberries are $10 for a sack
Yeah,
of blue for a little plastic bin of blueberry. $10. I love blueberries. They're high in fiber. They're delicious. They're nutritious. They got all the things you want,
yeah.
antioxidants, and I can't even afford them. $10 for a carton of blueberries. What the heck's going on?
Tell me about
So,
it. The
do we require a relief
blueberries,
here, or can we actually make it work with?
we require relief. For a long period of time, $100 oil is not good, especially for a consumer. Now, whether or not markets,
It's been 9 weeks now of close to $100 oil.
yeah, and then you have to take into account the oil prices themselves kind of rise slow, it's a little bit slower, but Yeah, it's gonna start hitting a lot, especially with harvest happening.
Mm.
And if fertilizer still can't go, expect rice prices to start rising.
I
And
did
I'm
recently
not telling you to go buy futures on rice
don't do
or
that.
soybeans.
It's
I'm not
hard to
doing
do,
that.
by the way. It's not the easiest thing in the world to go out and buy futures on rice or soybeans. But I was gonna say, I did see a note that number of bankruptcies in farming is the highest it has been in 70 years, and that is really something to be thinking about because obviously our food production in the United States is we're very lucky that we have what they call the breadbasket of the world
Yeah.
here in the United States, that we grow a lot of very valuable crops, and we actually export a lot of that food, but because we consume it here domestically first, we're able to
Yeah.
get lower prices on a lot of that subsidized farming. The federal government subsidizes or incentivizes that behavior so that our food is cheaper. If that were to change, it would again that you talk about the K shape all the time. The bottom of that K would really be the ones that suffers. Okay, we're going
Mhm.
to shift gears. We wanted to talk a little bit about China today.
Yeah.
We're going to talk about China as an investment, but we're going to also talk about how China kind of feeds into the overall story that we're experiencing today. And so, what I'll do to start off is just say four things about China, and then I'll let you, kind of go on your soapbox, Arpit. But one, I definitely want to make sure we touch on the rare earth metals that they have a very large amount of and a great deal of control over. Obviously, they have a huge connection to Iran. We've been talking about Iran basically since the show started because the war's been going on since the show started. So we'll talk about their connection to Iran. I would love to talk about the tech and the AI aspects of China and how they are have some advantages structurally over the United States, and then how we have advantages over them, but how our cooperation actually really truly matters in the end. And then the biggest company, one of the biggest companies in the world, Apple, how it interacts with China and how that keeps China afloat and simultaneously keeps Apple afloat. So those are four topics I at least want to touch on before we leave it. But why don't you just kind of give us your overall arching thoughts on China and how important or unimportant it is, and what role it's playing in the world from an economics and finance perspective?
Yeah, so surprise, surprise, China's important, very important to the global economy. But I haven't seen a lot of news about China, especially more recently. But there are some interesting things happening over there, especially on the economics side of China, that I think is important, especially again considering where China is on the global stage, on the global economic stage, and then also armchair generaling it out how the current economy might impact its plans in the future, right? So there are six major stories that are kind of happening right now in China. I don't know if you've heard of them or if you kept track of them, but one of the big stories is deflation. China itself
Deflationary pressures in China,
in China,
because
China's
their
facing
consumer is really different than the American consumer.
their consumer is incredibly different. We saw this a little bit with Japan's side. The consumers have a tendency to save a lot more and not spend as much. Their propensity to consume is not the same as the American propensity. But also, there's something they're starting to see on their industrial side, especially overcapacity on EVs, solar, batteries, e-commerce, just general longer list of manufacturing categories. They're all in these major cutthroat pricing wars to the bottom. And the policy response has been honestly to just keep building rather than clear out the capacity. So you're starting to see deflation amongst a lot of their core consumption groups, and it's pretty interesting. They're producing so much that these guys are starting to flood neighboring markets with their own stuff. Vietnam, right? Thailand, all these other places, and even if probably eventually Europe. There's gonna get flooded with Chinese EVs, and this is kind of why we banned Chinese EVs sales in America. It's because these guys produce so much of it that they keep the prices at the floor. I believe it's almost $10,000 cheaper than the cheapest Tesla to buy, one of the Baidu or the Xiaomi like EVs. So these guys maintain they're undergoing deflation. And one thing, if you're listening here, you might not know, you think, oh wow, price deflation means prices falling year over year. Oh, that's a good thing. That's very bad. We want
It
inflation.
typically means you have a very unhealthy economy.
Yeah, and think about it like this: if you're a consumer and you know your country is experiencing deflation, and the idea is that your prices are going to fall next year, I'm gonna just save and not spend money today because I'll just spend money tomorrow. It'll be
I
cheaper,
think it'll be cheaper.
and it just keeps compounding. So
Yeah.
that's a big story. The other one again is the property crisis. We saw this happen up there.
Right.
It still hasn't cleared up a little bit. Weak
Big empty
domestic demand.
cities.
They still have these massive ghost cities. They have horrendous property market. Even the property buildings themselves, they have this material called tofu drag, which is very poorly constructed concrete, and they use this because there's been so much stifling of money and corruption within their own industries that if you put water on their concrete, it literally just melts and breaks like plastic.
Yeah. While you're on that subject, I think it's important to point out one of the things that I get asked a lot in my practice is the Chinese economy gonna overtake the American economy? That may happen one day, but the bigger question is, will they in terms of size, just because they have 3 times as many, 4 times as many people as we do. But the other question is, will they take over as the world's reserve currency? What you just said about corruption, the faith in the community, the worldwide community to invest heavily in Chinese treasuries, which, Chinese bonds the way that you would in US treasuries or Chinese dollars
Yeah.
just isn't there.
No.
Until they can prove to the world that they are not corrupt, that they are not a totalitarian dictatorship, which they have not done, the fear that the Chinese are going to take over as the world's reserve currency or become the most dominant superpower economically in the world is really not founded in reality. Now, in
Mhm.
fairness, what Trump has been doing and we have been doing with alienating our allies and pissing off our buddies isn't smart because it does drive them into the arms of China. And China does have the ability to sell a lot of products to places that we would like to stay our friends. But even with that backdrop, the idea that that's going to happen overnight or over the next 5 years, 10 years, I don't think is founded in reality. And so I do want to continue talking about China, but I just wanted to say that if you're out there and you're sitting here going, oh, they're gonna take us over and we're not gonna be able to be the world's reserve currency anymore as the US dollar. I think that is a fear that you can put aside at least for the next decade.
Yeah. And then I get in some points on that, but I don't want to dive too deep into that because that's it. You can make that its
Kind
own
of a separate
topic.
subject. You
It's
know me, I get distracted real easy. Squirrel,
Yeah,
squirrel.
no, these are very big, important subjects that are worth talking about. So it's
Yeah,
worth mentioning them. I just don't want to. I don't want to talk about it right now. Like I don't want to add to it.
that's
I
okay. Yeah.
definitely can.
Hey, your show too, Arpit. You get to drive the train, baby.
China, again, major stories. Weak domestic demand. There's a major consumption gap. The export model is running out in China. They're posted a $1 trillion goods trade surplus in 25, blowing through tariffs in the first 11 months. The problem, though, is that it's now politically untenable everywhere. US, EU, increasingly the global South are all pushing back. So it's you're getting these major issues, and then again, and this is actually a really big one. That's You can make the argument that's experienced everywhere is youth unemployment and labor market stress. We are experiencing youth unemployment. Unemployment for college graduates in the US is now at the
Very.
highest point since 2008.
I'll get that stat for you while you're talking.
Yeah, so it's fairly hard. You can apply that, but again, when you're compounding all these issues, these are all the issue with all this is that these are slow burners and they're hard to stop, and they're just gonna keep they keep compounding time over time over time. And then the big one again is the Chinese demographic, where their population is set to decline by several hundred million by 20.
People that don't understand how crucial that is, a economy cannot run with a shrinking population.
Yeah,
The economy will shrink. It
and
is a death knell, a death spiral for an economy when their population shrinks.
it
And
is
China will
catastrophic.
lose hundreds of millions of people in their population over the next 35 years.
I believe by 2050 they'll be well below a billion people,
Yes,
well below a billion. It's only in the 800 something million range, which is still a lot of people.
a lot of people.
But here's
That's
the
where
problem.
India looks a little bit more promising than China right now because they didn't have the one child policy.
Yeah, the only India has its own stuff, but yeah, it's that is one of the big things there going on. And unlike the U.S., because all major economies are experiencing more people, they're domestically more people dying, and not enough children to essentially replace them. And we determine that by saying what's the average birth rate or average amount of births in a family. I believe it's less than two. And if it's any number that's less than two, that means general slow population decline because it takes two people to make a child.
And the United States was continuing to grow because of immigration, but we've really
Yeah.
cracked down on that. And again, whether you're for that or against it, it's your prerogative. But legal immigration has been a pillar of bringing very talented and hardworking individuals from other countries into the United States. And that has also slowed with the closing of the illegal immigration, which is, I think, really important and smart. You had also a massive slowdown in legal immigration, and that might end up causing some pain for us down the road if we don't find a way to rectify that. Let's touch on the rare earths real quick.
Yeah.
They have a ton. The United States is banking that they can fix the rare earth problem that we have before they begin to leverage us. That remains to be seen. I think that both China and America think that time is on their side. The Chinese are looking at the political pressure that is facing the Trump administration and Republicans because of the painful economy we've been talking about. Right now, the midterms do not look very promising for the Republicans. And so I think China is thinking they can have more leverage once Democrats are in control and have power because they'll be fighting amongst the Democrats and the Republicans. And then I think the Trump administration is just thinking with a combination of tariffs and then maybe some exploratory activity of rare earth metals here within the United States or maybe in Venezuela or also Iran. They may be able to stave off the pressure and leverage that China can inflict. One of those two may be wrong, and we'll probably find out a little bit more about that, say, in the next 2 weeks or so as we move towards a conversation between Washington and Beijing about more cooperation, and we'll kind of see who has the more leverage. I guess my question to you, as the CFA on the podcast, how investable is China? Should it be something that people have in their portfolio, or they should be avoiding it? And again, understand when I say that, I don't mean take action on what Arpit is about to say. I mean, in general, is it overweight, underweight, middleweight story, something you got to own? I'm just asking what a CFA thinks, not what you should do.
Yeah, so I'd say right now China is definitely it is, in my opinion, an underweight strategy. There's just way too many headwinds kind of against China right now. And then on the rare earth story, rare earths themselves actually aren't rare, even though we call them that. America has a lot of it. No, the issue with them is processing, which nobody around the globe
It's
has that process.
environmentally gross.
And we don't have that here in the US.
What is
China
that? Not
has
in
all
my
the development.
backyard, NIMBY.
NIMBY, yeah, not in my backyard. You can have your rare, it's just not over here.
If you're one of our listeners and you're willing to have a nickel mine right in your backyard, let me know. We'll
A lot
call
of
up.
noise and a lot of pollution there.
We'll send a message to the president and say, "Hey, they're ready for a nickel factory. Let's go do it."
But yeah, China is definitely an underweight strategy for me. And personally, I don't hold any Chinese stocks because one, I fundamentally disagree with the owning of Chinese companies. That's nothing against China itself. It's when you buy a stock, you are an owner of that company. But China's bylaws state that no foreigner may own any Chinese company. So if you buy Chinese stock, you are not an owner of their stock. You're owning some Bermuda, you know, company that claims to
What
be a
about
part of it.
what about like a Chinese ETF or something?
It's the same thing, right? Those guys they're all based in America. They're all owning the same guys. But I'd say it's an underweight strategy. I would not hold Chinese stocks at the moment. I will not buy. I would not personally invest in China. It would not be bad to invest in the areas around China.
Yeah.
Australia, India, Japan. These are pretty decent countries that have things going for them. I
One of
believe.
the one of the countries that I find interesting is Singapore.
Yeah,
It's a very small country, so it's not on the same scale as China, but they have a very good balance sheet as a country
well
and
run.
well-run country, capitalist, free, not as free as the United States, but definitely a freedom agenda,
Hmm.
very business friendly, and with that strong currency, if the dollar weakens long term, that would be an area that I think you might find some outsized benefit from that currency weakening. Now, again,
Like them in
since
the Swiss.
the Swiss as well, yeah. But again, you're talking very small economies relative to China, India, United States, Europe, Japan. They're much
Yeah,
smaller. So you have to keep that in mind. And geographically, when you're that small and you have that small of a population, the impact you can have is going to be smaller. But it's just an interesting thing to be thinking about. So again, things that we plan on talking about next week. We're going to come back and tell you what we're thinking about this summit that's coming up between Beijing and Washington, D.C. We will give you ideas, thoughts, education. Remember, every single thing we talk about on here should be discussed with your financial advisor if you're going to take any action with your tax professional or your legal advisor. If you're a do-it-yourselfer, do lots and lots of research. Don't depend on what we're saying here. We've got to keep our compliance happy, and that's not what the show is about.
yeah.
Excuse me. If we can edit out my coughing, great. But if not, but I mean, we sure like bringing the show to you. I like to wear a good shirt and a great hat every time. I don't
I
know what
work
I gotta
out.
do to get Arpit to start doing the same thing, Arpit. I mean,
I don't
go
have
out,
those. I don't have
do something like get a hat, a fun hat, like something. Maybe wear some sunglasses or something to kind of spice up,
endorse.
got some personality. If you want, you can drink that Indian bourbon on that you brought me for my birthday. You can drink that on there. I don't think anybody will care.
You want me yeah, I mean, maybe we'll do it every time I say right, I take a drink.
Listen, I don't care what you do. I like you just the way you are. You're doing a great job. You bring a lot of value to our listeners, and I appreciate that. We're going to come back next week. We're going to give you something new, something great to talk about, and hopefully we'll continue to see this market go upward. It's always nice seeing market rallies that is better than the other thing. Not that I am in any way understanding why it is rallying. Like I said, it just seems bulletproof right now, and it is acting like I do when I see my check engine light in my car. I'll deal with it later. So
6
we
weeks
will
in
be
a row.
6 weeks in a row. We'll be back with you guys next week. Bye.
Take care, y'all.